The proposed increase in withholding tax from 15% to 20% on government securities has repercussions for investors, both local and foreign, as well as the general Zambian economy. What are these repercussions, and what should you do as a local Zambian investor? This is what I would like us to look at today. But before we get started, I would like to encourage you to subscribe to my channel. If you haven't subscribed already, subscribing to this channel is very important to ensure that I can find time to actually do such kind of videos for you. So if you're not a subscriber already, consider subscribing by clicking the subscribe button. You'll find it at the bottom. It's down here. Click subscribe right now, and don't forget to share and like and comment so that we can get a wider coverage of this video. Let's get started. When you invest in government securities, which are Treasury Bills and government bonds in Zambia, you are taxed a 15% on your interest income. On government bonds, the interest income is referred to as your coupon income, which you get biannually. 15% of that income is withheld and handed over to the Zambia Revenue Authority. There's been a proposal and a bill in Zambia which has already gone through Parliament and different readings as well as committee hearings on this proposed increase. In fact, the bill has reached its very advanced stage, such that we are waiting for the minister to sign a statutory instrument before it becomes law, meaning that it is 99.9% likely that withholding tax on government securities will be increased to 20%. Withholding tax is the tax that is withheld from your interest income. For example, if you get coupon incomes on your government bonds of, let's say, 1,000 kwacha every 6 months, 15% of that 1,000 kwacha is withheld. That is 150 kwacha, meaning you get a net amount of 850 in your bank account. When this bill goes through, it means that instead of getting 850 kwacha net into your bank account, you will be getting 800 kwacha net into your bank account. As you can see, this is going to reduce your income, your interest income on government securities. For me, this development is very infuriating because I would like to see as many Zambians as possible invest their money, save their money and invest it so that it grows locally. We already know that Zambians don't have a savings culture. Very few Zambians have access to savings products. And very few Zambians even know investments such as government securities. So what I'd expected from government is actually the opposite. Instead of increasing withholding tax on government securities, government should consider reducing withholding tax on government securities to encourage Zambians to save more and to invest more, particularly in government securities, which are safe investment schemes. In 2024, government removed the withholding tax on life insurance policies to encourage investment in life insurance products by Zambians and to encourage the industry of life insurance to grow. So it is possible that government can actually reduce the withholding tax and encourage Zambians to save and invest their money so that it grows. You may be wondering, why would government want to increase this withholding tax? One reason why government may have considered increasing the withholding tax from 15% to 20% on government securities is to increase their revenue collection. We know that government has been struggling with increasing revenue for development programs. We all know the debt restructuring efforts that have gone in. And perhaps this is one way of government trying to increase the revenue collection. But I think they should have really thought widely about the repercussions on the motivations of Zambians that are starting to understand investments such as government bonds and treasury bills. many Zambians have started looking at this alternative compared to keeping money at the bank, which earns you very little interest. And as we are making a little bit of progress, all of a sudden, we see coupon rates on GRZ bonds coming down, and now an increase in the withholding tax. This is going to lead to very adverse effects in terms of discouraging Zambians from pursuing these investment vehicles. Zambians may start looking at alternative investments that may start looking much more attractive than government bonds as it stands. The second reason why government may have considered increasing the withholding tax is to encourage private sector investment, particularly the commercial banks. We know for a number of years now there's been these stories about commercial banks preferring to keep their money in GRZ bonds, unlike giving the money in form of loans to SMEs who are more riskier and are not certain of repaying back the loans. So rather than taking on these bigger risks, commercial banks have preferred to lend money to government, which is a secure investment. So less returns on GRZ bonds may encourage commercial banks to consider other alternatives, such as increasing their lending to businesses. As a result, encouraging lending to small businesses as well as just the general business. Those could be amongst the reasons why government has looked at government securities as an area where they can increase the revenue collection. And perhaps there's been a lot of investment in government securities, and government is having to pay back a lot in terms of the coupon incomes or interest on investments in GRZ bonds. The other key players that are going to be affected by this increase in withholding tax are pension funds and retirees. Pension funds are required to keep a certain percentage of their investments in safe investments such as government bonds. Now, with reduced returns on GRZ bonds, pension fund managers may need to look at alternative investment vehicles that are more risky but that can give them higher returns compared to what they will be getting from the GRZ bonds. So this will affect retirees as well in terms of their return on their retirement funds. And if you're a retiree, this is the last thing you want to hear. You're looking forward to, your golden years where you can relax and take it easy and enjoy your life. But then your income, because of the increase in the tax, may not match what you had planned to retire with. So quite a lot to think about there. So what should you do as an investor who's affected by this development? You could start looking at alternative investment vehicles or investment products. Right now, the fixed deposit accounts are starting to look relatively attractive. So fixed deposit accounts are mainly sold by commercial banks, and they are short-term investments that are comparable to Treasury bills. At the moment, the returns on Treasury bills, particularly if this proposal goes through, are lower compared to the return that you will get on your fixed deposit account. And so an alternative could be looking at making investments in fixed deposit accounts with your commercial bank or other institutions that offer similar products. That's one alternative. The other alternative is investing in companies that are listed on the Lusaka Securities Exchange by buying shares of these companies. There are a few companies that are doing relatively well on the LUSE, and you may consider buying their shares and enjoy dividends as well as capital appreciation in the share price, which at the moment also looks much more attractive than the returns you would get from Treasury bills or GRZ bonds. But you also need to balance that with your financial goals and the duration of investment that you are looking at, the time horizon, and whether you can manage to keep money locked up in a longer period of time, because shares are a long-term investment. So for shorter-term investments, fixed deposit accounts start looking attractive. For longer-term investments, investing in shares of companies listed on the Lusaka Securities Exchange starts looking much more attractive. What is the overall repercussion of this development on the Zambian economy? So I'm looking at this from two angles. What we might see is an increase in lending to businesses, because lending to businesses by commercial banks may become much more attractive to them than lending to the government. The word is might. There's always an issue of security, whether we can get back our money from these small businesses. Lending to SMEs has always been risky business. So it might result in an increase in lending to businesses. It may not, and we hope that it could. And if it does that, it may spur economic development, because we expect businesses to get this money and invest it in their business operations, and as a result, spur economic growth. On the negative side, increasing the withholding tax would deter investors, both local and foreign investors. If we look at the local investors, our incomes are already very little. And if we are going to have our investments returns reduced because of tax, we might not want to invest in products such as government securities, and we may start looking at alternative investments. And this could actually affect government revenue mobilization as well, particularly through GRZ bonds, because individuals may not want to lend money to the government anymore. If we look at foreign investors look at the yield on these investments and how attractive they are compared to other countries. There are many countries across the globe whose income tax on investments such as bonds or treasury bills is not taxable. So it's tax-free. So these foreign investors may start looking at alternative markets for their investments, and that might reduce the inflow of foreign investment into Zambia, and which also might affect the general economy negatively, as well as have repercussions on inflation and so many other economic factors. So really, this is a double-edged sword that we needed to consider carefully. What could have government done? My view is that government can still consider maintaining the 15% for small investors. So if your interest income or coupon income is below a certain threshold, for example, 10,000 kwacha every 6 months, you could say we'll maintain the 15% or even reduce it 10%, and only consider a certain threshold to increase to the 20%. So perhaps you could say, if your interest income is above 100,000 kwacha, we're going to tax you with withholding tax of 20%. Whereas if your interest income is less than 100,000 kwacha, you remain at 15%. If your interest income is 10,000 kwacha, it is tax-free. This is how I would have really loved government to start looking at how they tax incomes from government securities. And I hope it's something that we can consider even in the 2026 budget proposal. Since this is a new development, perhaps this is a submission that we can start making to the Minister of Finance that can be considered for the 2026 budget proposal. I don't know your views on this development. I would like to hear from you. What do you think are the repercussions of increasing withholding tax on government securities from 15% to 20%, and how does it affect you personally? For me personally, my income is going to be reduced by the 5%, just like I expect it's going to affect you too. And it is going to affect my financial plans, and that might require me to start looking at other alternatives. I'm starting to look at shares in a much more lighter, attractive way now. So I don't know about you. I would love to hear your views. Leave your comments in the comment section below. Well, this is all I had to share in today's program. If you enjoyed today's program, don't forget to give it a like, and don't forget to share this video. Thank you so much for joining me. If you haven't subscribed already, consider subscribing to my channel by clicking the subscribe button. You'll find it at the top. It is up here. Click subscribe right now. Thank you so much for watching, and see you next time.